Good day everyone, this is Ma'am Aduko, and for our tutorial today, we will continue our study of financial statements with the statement of comprehensive income. And before I will proceed to our discussion, I would like to thank everyone who watched and subscribe to our YouTube channel, Bright Minds. And for those who are not yet subscribed, please do subscribe, and you can click the notification buttons to be aware of our new videos. I will give you our learning objectives, identify the elements of the SCI, and describe each of these items for a service business and a merchandising business. Then the second objective, prepare an SCI for a service business using the single-step approach. Try to solve this one first. During October, a law firm had the following transactions involving revenues and expenses. Did the firm earn a net income or incur a net loss for the period? What was the amount? Paid 1,200 pesos for rent, provided services for 2,750 pesos in cash, paid 250 pesos for telephone service, provided services for 1,900 pesos on credit, paid salaries of 1,675 pesos to employees, and paid 350 pesos for office cleaning service. We will answer this problem at the end of our tutorial video. Let us define statement of comprehensive income according to Haddock, Price, and Farina. Statement of comprehensive income is also known as the income statement. It contains the results of the company's operations for a specific period of time, which is called net income. If it is a net positive result, while a net loss if it is a net negative result. So this can be preferred for a month, a quarter, or a year. So in other words, statement of comprehensive income reports the results of operations of the business in one accounting period. So the statement of comprehensive income contains this following information: revenue generated by operating the business, the cost spent to generate the revenue, income, which the excess of revenue over cost. So the statement of comprehensive income is described as a for the period report. So it means that the amount present on the report includes only those occurred within the given period. So remember this, that the financial statements is a set of interconnected reports with the other financial statements. So the SCI is prepared first for the determination of the net income. And then after the determination of the net income, it is transferred out to the statement of changes in equity to be included in the determination of the owner's capital balance as of the end of the year. Then afterwards, the capital balance is transferred to the statement of financial position. So if the double entry accounting is implemented correctly or rightly done, the SFP will be balanced. The statement of financial position will show the total assets equals to the sum of the liabilities and owner's equity. What are the usefulness of statement of comprehensive income? So the statement of comprehensive income helps evaluate past performances, like for example, between 2 years, like 2019 versus 2020. So which year did the business entity perform better? Then another usefulness is it helps to predict future performances. And then the other one, it helps assess the risk or uncertainty of achieving future cash flows. When we speak of cash flows, it means the incoming and outgoing of cash, representing the operating activities of an organization. So the statement of comprehensive income helps in assessing the risk or uncertainty of achieving future cash flows. And then what are the limitations of statement of comprehensive income? Okay, so one is the companies omit items that cannot be measured reliably. Like example, the brand value of merchandise. So you cannot measure it reliably. And then the other one is income is affected by the accounting methods employed. So one example is the computation of depreciation of PPE, of property, plant, and equipment. Okay, so there are ways in computing for depreciation. Either the company will use the straight line method or the accelerated depreciation. And then the other limitations of SCI is income measurement involves judgment of the accountant. So these are the usefulness and limitations of statement of comprehensive income. What is temporary account? Temporary account, also known as nominal accounts. So these are the accounts found under the statement of comprehensive income. So they are called temporary account because at the end of the accounting period, balances under these accounts are transferred to the capital account, thus having only temporary amounts and resulting to zero beginning balances at the beginning of the following year. So examples of temporary accounts include revenues, sales, utilities expense, supply expense, salary expense, depreciation expense, interest expense, and among others. Okay, so the account found in statement of comprehensive income is known as nominal or temporary accounts. So, and while the accounts found in the statement of financial position, if you remember, it is called permanent or real account because real accounts are carried on to the next accounting period, while the temporary account or the nominal account, okay, so these accounts are transferred to the capital account, and then it will result to zero beginning balances at the beginning of the following year. So it will be closed at the end of the accounting period, so that at the next year, okay, it will begin as zero balances. What are the actions reported on the statement of comprehensive income? So inside the comprehensive income, we can find the income and expenses. So these are the general terms used to describe the elements of the statement of comprehensive income. So what do you mean by income? Income refers to a transaction that increases assets. So what are those transactions that increases assets? Like example, sales. So it means cash is flowing into the business entity, or decreases liabilities. Okay, so what does it mean? The transactions that decreases liabilities. Okay, so the business entity are able to pay his monthly rent, for example. Okay, so that's it. Or we're able to pay his accounts payable, leading to increase in equity. So income increases the owner's equity, resulting from the operation of the business and not from the owner's contribution. So income results from the operation of the business. And then we go to expenses. So what are expenses? Expenses are transactions that decreases assets and or increases liabilities, leading to decrease in equity resulting from the operation of the business and not because of distribution to owners. So an example of transaction that decreases assets, like example, you purchase, the business entity purchase raw materials for the production in cash. So it means the asset accounts like the cash will decrease. Okay, so that will be cost of goods sold. So cost of goods sold or cost of sales is an expense. And or increase liabilities. So what does it mean that expenses increase liabilities? For example, the business entity were not able to pay the utility bills for the month of July. So that utility expense will become an account payable. And then expenses leads to decrease in the owner's equity. So this one, expenses results from the operation of the business and not because of distribution to owners. There are two kinds of income: revenues and gains. Revenues are income generated from the primary operations of the business. So we can say that it is revenue because it is generated from the primary operation. Example, the sales of merchandise. Selling of merchandise is the primary operation of the store to sell its inventories. And then gains. So what are gains? Gains are income derived from other activities of the business. Like for example of gains, interest income for the time deposit. For example, the business entity deposited the cash to a bank. Okay, so the business entity will earn interest income. So interest income is considered gains and other income and not a revenue because it is not generated from the primary operations of the business. Classification of income as to revenue and gains is dependent on the nature of the business or what type of the business is. Example, for a merchandise business, interest income is not a revenue. However, for a bank whose primary operation is to give out loans, interest income is considered revenue. So always remember this. There's students. Okay, so revenue and gains is dependent on the nature or kind of the business. We already know that there are two kinds of income. There are two kinds of expenses as well. Okay, so the expenses and losses. What are expenses? Expenses are related to the primary operations of the business. An example of expenses, the cost of merchandise is part of the selling activities. What are losses? Losses are from the other activities of the business. Example, interest expense from note payable is classified as losses and other expenses because this one, the interest expense, is not from the primary operations. And remember this, revenue is recognized on the period of delivery, while expense is also recorded in the same period of the revenue it was able to generate. This is in according to the matching principle of accounting. So according to matching principle, related revenues and expenses should always go together. If the revenues are recorded in period 1, the related expenses should also be recorded in period 1. There are different accounts under revenues, the service income and the sales revenue. Service income account is generally used to describe revenue from rendering of service, and those providing service are the service company, like example, law office, hospitals, or universities. Example of service income, rent income, professional fee, or tuition fee revenue. And then the sales revenue account is generally used to describe revenue derived from selling of goods, and the provider of these goods are the merchandising company. Example of sales revenue are the book sales, food sales, or ticket sales. We go to the presentation of statement of comprehensive income. There are two formats, namely the single step and the multi-step. Okay, so I have here an example of statement of comprehensive income. We can see that all revenue items are grouped together and all the expense items are grouped together. And why it is called a single step ACI? It is called a single step ACI because the net income is computed using only one step, or using only single step. That is deducting the total expenses from the total revenues. And also, subtotals are not computed and presented on the single steps SCI. Okay, so the single step ACI is generally used by small business or the single proprietorship because of its simplicity. It is very simple to use. The single step ACI is closely linked to the nature of expense format, for it listed down the expenses based on the source of expenses such as salaries, purchases, and supplies. The multi-step ACI format will be discussed on the other video. These are the parts of single-step statement of comprehensive income. We can see the heading, the business entity name, and then the title of the financial report, which is the statement of comprehensive income, and the date. So for statement of comprehensive income, we will use the word for the period of December 31, 2016, and then the revenue, which is the service revenue, and then the expenses. The net income is derived by subtracting the expenses from the revenue. So we know that it is net income if the revenue is more than the expenses, and it will be a net loss if the expenses is more than the revenue. And also, the students, don't forget to place the currency symbol or the peso sign, and then double rule or double line to show the final answer. I have here a question. The single-step income statement emphasizes A, the gross profit figure, B, total revenues and total expenses, C, extraordinary items more than it is emphasized in the multi-step income statement, or D, the various components of income from continuing operations. So what would be your answer? Is it A, B, C, or D? So the answer is total revenues and total expenses. Letter B. Okay. We're going to answer the problem. The problem states that the firm paid 1,200 for rent, provided services for 2,750 in cash, paid 250 pesos for telephone service, provided services for 1,900 pesos on credit, paid the salaries of employees amounted to 1,675 pesos, and also paid 350 pesos for the office cleaning services. So how much will be the service revenue of the firm, and how much will be the incurred expenses? Okay, so the total service revenue earned by the firm amounted to 4,650 pesos, because the firm provided services for 2,750 pesos in cash, and also they provided services for 1,900 pesos on credit. So this means that the firm will have collectibles from the customers, and then the total expense incurred by the firm amounted to 3,475 pesos. So these are the rent expense worth amounted to 1,200 pesos. The utility expense, which is the telephone service, cost 250 pesos, and then the salary expense of the employees and the office cleaning services. So the total expense is 3,475. So in order to get the net income, we need to deduct the expenses from the service revenue. So 4,650 pesos less 3,475. So the firm receive a net income of 1,175 pesos. Thank you for watching our tutorial video, guys. I hope you learned something from our discussion today, and don't forget to subscribe and follow our YouTube channel, Bright Minds. Have a nice day. Don't forget to pray, and God bless.